Welcome back to Krol and Partners. Today, we are talking about Britain after Brexit, from energy dependence to global arbitrage. So, Brexit was widely portrayed as an economic shock for the United Kingdom. Most debates focused on regulatory divergence and political uncertainty. But a deeper structural transformation has been unfolding in parallel, particularly in the energy sector. Instead of remaining trapped between the European Union and global markets, Britain has been gradually repositioning itself as a strategic energy trading hub. In this shift revolves something important. Brexit may have reduced some forms of integration with Europe, but it's also created space for the global energy arbitrage and investment flexibility. The structural break after Brexit. When the UK formally left the European Union, it excited the integrated European energy trading system. The new relationship between the United Kingdom and the EU is governed by the European Union and United Kingdom Trade and Cooperation Agreement, which defines the post-Brexit economic framework between both sides. However, this separation also introduced inefficiencies. Energy trading between Britain and continental Europe became more expensive and administratively complex. In fact, analysts estimate that the new trading agreements added hundreds of millions of pounds in additional electricity trading costs due to less efficient cross-border market mechanisms. But instead of simply accepting these disadvantages, Britain began to pivot strategically. The emergence of Britain as an energy trading node. The UK occupies a unique geographical and financial position. It sits between North Sea production, LNG imports from global markets, European energy demand. This positioning allows Britain to act as a transit and trading hub. One example is the National Balancing Point, Britain's main gas trading benchmark. It has become one of the most liquid gas trading hubs in Europe, influencing price formation across the region. In practical terms, gas can arrive in the United Kingdom as LNG from the United States, Qatar, or other suppliers, be priced through British trading platforms, and then move onward into European markets. This is the essence of energy arbitrage. Infrastructure as strategic leverage. Energy arbitrage only works if infrastructure supports it. Britain has invested heavily in this capability. One critical example in the Isle of Grain LNG terminal, one of the largest LNG facilities in Europe. The terminal currently supplies roughly 20% of the UK's gas demand and is undergoing expansion that could rise this share even further. Ownership and investment in the infrastructure reflect a broader strategic logic. Energy facilities that once functioned as purely commercial assets are now seen as strategic nodes in global energy flows. Interconnectors and the European energy system. Despite Brexit, Britain remains deeply connected to the European energy system through physical infrastructure. New electricity interconnectors are being built between the UK and EU countries, expanding cross-border capacity significantly. By the early 2030s, Britain's electricity interconnection capacity with Europe could exceed 18 gigawatts, almost double current levels. These links allow Britain not only to import electricity when needed, but also to export power during periods of surplus. In other words, the UK is becoming a flexible energy balancing point for the region. Global investment and the energy transition. The strategic pivot is not limited to fossil fuels. Britain is also attracting major investments into future energy systems. For example, international partners have committed billions of dollars to projects in offshore wind and hydrogen infrastructure, reinforcing the country's role in emerging energy supply chains. These investments highlight another important dynamic. Post-Brexit Britain is positioning itself not only as trading hub, but also as a platform for global capital in the energy transition. The logic of global arbitrage. When we connect these pieces, a broader strategic pattern emerges. Britain's energy model increasingly operates on three levels. First, global sourcing, importing energy from multiple global suppliers. Second, regional redistribution, channeling energy flows into Europe through infrastructure and trading hubs. Third, financialization, leveraging London's financial ecosystem to structure energy investment and trading. These combinations transforms the UK into something more than just a consumer or producer. It becomes an energy marketplace. So, Brexit certainly created economic frictions, but it also created strategic flexibility. Instead of remaining tightly embedded with the European Union's regulatory framework, Britain has begun experimenting with a different model, one based on global energy arbitrage, infrastructure control, and financial intermediation. Whether this model ultimately strengthens the UK's economic position remains an open question, but what is already clear is that Britain's post-Brexit energy strategy is not simply defensive, it is adaptive. And in a fragmented global energy system, adaptation may prove to be the most valuable asset of all. If we want the full structural analysis, including investments flows, geopolitical implications, and energy market dynamics, the complete article is available on my website. This episode includes the framework, the article provides the full depth. Thank you for the attention. Don't forget to subscribe to my YouTube channel, Krol and Partners.